Good morning, this is Tim McGowan for the Finance News Network. US equities wavered Monday as traders braced for the busiest week of corporate earnings, as well as a likely rate hike from the Fed Reserve. Monday kicked off the final week of trading for the month of July and perhaps the most important week of the summer, with the Fed meeting and GDP data on deck. The S&P 500 was flat overnight. The Dow Jones Industrial average closed 0.3% higher, and the tech-heavy Nasdaq Composite slid 0.4%. All of the major averages are on track for their best month of the year. Almost a third of the S&P 500 are set to report quarterly earnings this week, including Apple, Alphabet and Microsoft. This all comes as investors fret about the potential of an economic recession. One strategist said, investors likely believe Thursday's GDP report will show a second quarter of decline, which is the unofficial signal of a recession. While the Fed will probably announce a 75 basis point rate hike on Wednesday, they will offer a more moderate tone towards further rate increases. We see this counter-trend rally continue in the near term. Tech stocks fell Monday on the heels of a warning by Snap, which reported disappointing earnings last week, causing investors to worry about declining digital ad spending in the current economic climate. This continues to cast a shadow across social media platforms. On the flip side, energy stocks were the best performing sector as oil prices rose over 2% on Monday, boosted by supply fears and a dip in the US dollar. Chevron was the top gainer in the Dow, up nearly 3%. Elsewhere, shares of Newmont Corporation slid 13% after the mining company reported a quarterly loss that was down nearly 41% from a year ago, hurt by a drop in gold prices. Aftermarket, Walmart cut its quarterly and full-year profit guidance, saying inflation was changing how its customers spend. The big box retailer said it now expects same-store sales to rise about 6% in the second quarter, excluding fuel, as consumers buy more groceries instead of higher margin discretionary items. Shares of the company fell about 7% after hours. It also dragged down other retailing stocks, including Target, which was down more than 4%. The strong US dollar has wiped billions of dollars off the second quarter sales of US companies, prompting many to cut their guidance for the remainder of the year. Even if the rise of the dollar was to stop here, the strengthening we've seen over the past 12 months will be enough to prompt further downgrades to earnings estimates just because of the foreign exchange headwinds. The implications of which will play out further this week as the earnings season unfolds, with US multinationals set to report. One Australian dollar strengthened compared to the US dollar yesterday, buying 69.6 US cents. In commodity news, iron ore futures are pointing to a 0.4% gain. Gold prices gave up initial gains to slip on Monday as US Treasury yields edged back up, while investors position themselves for an expected 75 basis point interest rate hike by the Fed Reserve later this week. Gold lost 0.5% to around $1,737 an ounce. Silver was down 1.6%, copper was up 0.2%, and Bitcoin futures were down 3.9%. The SPI futures are pointing to a 0.4% gain this morning. This is Tim McGowan for the Finance News Network. Have a good day.